Well, welcome, Anton and Geoff. We're here today to share a little bit about the 2024 U.S. Health and Fitness Consumer Report. I'd love for each of you to share one or two surprising data points that you found from this year's report. Anton, do you want to start?
Absolutely, and thank you for having me, Pam. Geoff, thanks for joining as well. So one thing that stood out to me was that as both fitness facility operators and consumers still continue to recover post-COVID, and 2023 still featured some challenging macroeconomic situations. It was interesting that the fastest growing membership segment that we saw was in among high-end facilities. So the growth of $100+ a month monthly fee segments expanded at nearly 8% year-over-year rate, and that outpaced overall membership growth, which was at just under 6%, reflecting a trend towards more premium fitness experiences. And so while the vast majority of fitness facility members, about 2/3, still pay less than $50 per month, the sharp rise in high-end memberships point to a consumer base that value upscale facilities and enhanced amenities. I found that striking and interesting.
Geoff, I know you found a trend that was, kind of fit in with that a little bit on membership growth and the membership fees.
Yeah, absolutely, Pam. And I think that's when we analyzed the data and looked at how it was coming out. I think the first thing that jumped out to me was just the dual dynamic of having strong top line membership growth of about almost 6% year over year, coupled with increasing average membership fees up to almost $65 this year, which was around a 9 or 10% year over year growth rate. So especially when you consider the macroeconomic factors, seeing that strong top line growth coupled with the increased pricing, and you really see just the strong value proposition that health and wellness services have to offer consumers. And I think that really bodes well for the future of the industry, and continues to point to a pretty healthy operating environment as consumers place really high value on this type of offering.
I do think that it really makes it clear that consumers are willing to pay for this and pay for more than maybe some clubs are offering in the HVLP market. So that's really interesting. And then there were a couple of trends that you guys both noticed on the membership side. Anton, do you want to speak a little bit to the membership trend you saw?
Yes, Pam. So one thing that stood out to me as we drill a little bit further down into the demographics cuts of this research was the strong growth among the Hispanic membership. Since the past almost decade, no other ethnic group has increased their level of membership with fitness facilities at the same rate as Hispanics. Since 2015, this group has increased at a compounded annual rate of over 17%, making this group the fastest growing ethnic segment in the US. What's more, in 2023, Hispanic members pay the highest average monthly fee of any ethnic group at about $73 compared to $65 for US members on average. So this kind of highlights not only the strong engagement in this group, but also the willingness of this demographic to invest in their fitness, creating long-term opportunities for growth for fitness facilities.
It speaks to the growing economic power of the Hispanic population throughout the U.S. as well. So that's nice to see that it's also reflected here. Geoff, you also saw a little bit of a membership trend that you wanted to share.
Yeah, I think the other one that stood out was really around the age groups. And if you look at the under 35 age group, their share of the membership base has really grown quite a bit since 2018. I think in 2018 it was around 45%. Now it's up near 50%. So that's a 5 percentage point move just over the last 5 or 6 years, coupled with the strong top line membership growth that really indicates that there's substantial growth in that under 35 segment. And I think it's it's emblematic of a lot of the trends that we see in the broader market around just the importance of health and wellness, and coming in and joining a gym earlier in your life stage, and potentially staying longer. Right. So I think there's again a lot of positive aspects to what we're seeing in the membership data trends.
Health club and studio operators need to be paying attention to that younger demographic and the Hispanic demographic, because those are two areas that are really growing. Are there anything else that you think the data is showing that health club operators and studio operators really need to, based on these 4 sneak peeks that you guys have offered, that they really need to consider?
So I think taken together, these trends indicate that the industry needs to be adaptable, right? Balancing high-end services with more inclusive offerings, while focusing on long-term retention strategies and catering to really diverse needs of a growing membership base across the US.
I totally agree with Anton. I think I'd also add that, operators should feel confident in the value that they're providing, and they should feel comfortable, particularly in today's operating environment, as you look at just inflation, labor costs, and all of that. Trust the value proposition that consumers see, and don't be overly hesitant to consider fee increases or looking to roll out some sort of plan that can help you better cover your costs.
You can download the consumer report. It is digital only at healthandfitness.org.